Hey everyone, it's Bo Benjamin here with Bo Benjamin Realty Group, powered by EXP. And on today's video, we're going to discuss the topic of what is earnest money. So earnest money is simply a deposit that is put forth by the buyer, and that is in order to take the property off the market. You see, when a seller and a buyer come together in a contract, everyone's expecting that contract to close within about 30 days, assuming that the buyer's using traditional financing. Well, during those 30 days, the seller is losing opportunities to sell their home to someone else on the market because they're pending and working with this buyer. If that buyer chooses to remove themselves from the transaction, mind you, I'm not a lawyer, but this is a legal binding contract between a buyer and a seller, and if the buyer chooses for no apparent reason to back out of the contract, then the earnest money is typically negotiated to stay with the seller. Now, I used a couple key terms there. Negotiated is one of them. Negotiated because this is a discussion between the buyer and the seller. The buyer and the seller have to decide what are the damages valued at to the seller. The seller just removed themselves off the market. They could have got other deals. Maybe a cash buyer would have came by, offered them $10,000 more than this buyer did. So there's opportunity cost of that seller removing themselves from the market. And if the buyer changes their mind with no contractually allowed reason, then the buyer has caused damage to the seller. So traditionally, and again, this is very important, this is all negotiable. I want to say that multiple times in this video. But traditionally, it is determined that the damages done are equal to the earnest money deposit. If the seller chooses, they can let the buyer out of the contract and put the house back up on the market, and in doing so, they typically will request that they keep the buyer's earnest money deposit. Now, how much is earnest money? Well, that can be anything. That is also completely 100% negotiable. If you're asking about the Indianapolis market, we see the most common amount of 1%. So if a house is $300,000, earnest money would be around $3,000. Again, you can write any amount in the contract. There's no rules to this, but I will say if a buyer is making an offer on a listing that I'm helping my client represent, when we're going through the purchase agreement together to see if this is a good offer for the seller, and we get to the earnest money and they're only putting down $500 on a $300,000 house, that doesn't seem like the buyer's that serious about this. And it's not going to hurt them very much if they waste the seller's time. So let that be a consideration about your earnest money decision. Now, the opposite is true as well. If the buyer wants this house and they feel like there might be another offer, they can go above and beyond and say, I will put 2%, for example, down. Our example of $300,000, that would be $6,000 down, and that money is at risk because if the buyer doesn't complete the transaction, then theoretically they would lose that amount. Now, what happens if something unexpected happens? Is the earnest money lost no matter what? A buyer might ask. No, that is not the case. In the contract, there are a number of different ways. I'm not going to go through every single one in this video, but the most common thing that most buyers would want to ask is, what if I find a major issue with this house? I don't want a broken house. I don't want a house with a $20,000 issue. So here's how the Indiana agreement reads. It says if the buyer has an inspection and they put that in their purchase agreement, that they get to have one and the seller agrees to that, then the buyer finds a defect with the house. Let's say a hole in the roof that they didn't know about. Say it just happened, just prior and it hadn't rained, so they didn't know about it yet. That's probably a big deal. It's probably multiple thousands of dollars to fix. And the inspector finds it and it needs a new roof, let's just say. Well, new roofs are probably anywhere from 10 to 20 grand in this region. And they can go back and request the seller to fix this. And if the seller, this is the key words, if they're unwilling or unable to remedy a defect, then the buyer may remove themselves from the contract. In that occurrence, you would assume the buyer will retain their earnest money. Now again, it's always negotiable. If the seller says, no, I want to keep it, the agents would get involved and have to negotiate out, and hopefully not legal counsel, but it could rise to that. But 99 point some percent of the time, I'm making that percentage up. I don't have data in front of me. A large amount of the time, a large percentage of the time, the earnest money will be returned to the buyer in a scenario where the seller has a defect that they are unwilling or unable to remedy. So as a buyer, you can put that money down with confidence, knowing that you'll probably get it back if you find a big issue with the house. Another example the buyer may get the money back is if they find something wrong with your financing. It's a contingency clause in the contract, and that clause states that if the buyer, for whatever reason, can't finance it, then they have a right to withdraw themselves from the contract. So it's contingent upon successful financing. In that case, most of the time, the buyers retain their earnest money. So it's always negotiable. That's the number one key. It's negotiable at how much you put down, and the buyers can shop with confidence and put that money down with confidence. I guess the last thing I will say about earnest money is it's held typically at a broker or title company. Now there's rules around this. A lot of people, buyers say, is that $6,000 going to the seller? No, it's not. The seller doesn't have access to it. The realtors don't have access to it. It's kind of like you're making a bet on the playground and you get a third party involved in order to hold the money. And that way, if there's any problems, then they're not just going to give it away. They're going to find a fair resolution. So everybody has to sign for the title company to release the earnest money back to the party it's going to. Hope that helped. Please like and subscribe if you found this video informational and valuable, and we'll see you next time.